Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, April 24th, 2019. In this video, I want to go over some trade ideas and just quickly just a reminder here that we have all five of the market-leading FANG stocks reporting within the next week or so. Let's just run through those real quick. And the point being that, and I've said this many times, these are the market, these stocks. They make the market. They've led the market higher. They make the lion's share of QQQ, or big bulk of the returns come from these stocks, and that's Apple. Let's look at the earnings dates real quick. Apple, I believe, is the last of the FANG stocks to report, April 30th. And by the way, I use the acronym FAAMG, not FAANG, because of the weighting that they have. Microsoft has a much larger weighting than Netflix and the Nasdaq 100. So April 30th, there it is. You can see here April 24th, which will be today after the close on Microsoft, Amazon tomorrow after the market closes, Alphabet on the 29th after the market closes, and then Facebook today after the market closes. So and also, sometimes I'll refer to the FAME. I'll add the I at the end of that acronym, and because Intel's the sixth largest component, and that one reports tomorrow after the close. So the takeaway from this, a couple things. The market has just not been conducive to swing trading, hence the lack of trade ideas. Yes, it's gone up, but that's not my style to buy just because something's going up. I've made my thoughts very clear on this recently. And the only significant technical development that I've seen in weeks, let me just go over that, is right here, the S&P 500. If you recall, I was watching the this line here, this level on the weekly chart, that key resistance around 282-ish, and what happened is we broke above it here. Let me fix this. There we go. Now we have weekly candles. There we go. So we had 4 weeks ago now, or almost 4 weeks ago, we had the close above that level, and so that was a bullish technical event. We took out what was a major resistance level. Remember, we talked about it. We tested that for weeks. However, as I said, the only thing that would matter would be a weekly close, because we had taken that level out on an inter-week basis on several of these candles, and so therefore, here's how you have to look at it. That was you call it a buy signal, if you will. I've still, like I said, had my concerns about it and how long this may last, but from the point where I'm putting the crosshairs, that's a green candle, and my candles are set to show the closing value. If it's green, that means you close at the high end. So this is a green candle, so we closed right up here, and from that point, as you can see, to where we're at right now, the S&P 500 has gone up 1.38%. So, waiting for that buy signal, there just hasn't been any opportunity for swing trading the broad market, nor many of the stocks that comprise the broad market. So again, my focus has been niche sectors, niche stocks, and covering those in most of those in unofficial trade idea formats via these videos that I'm about to do here with the long trade ideas. I have plenty of short trade ideas. I'm only doing the long trade ideas because I wanted to start out with TLT and a couple others. But let's dive into the charts. But again, I just wanted to share my thoughts as to why the trade ideas are light. I don't force things. I go. I'll sit and wait for the market to set up into my type of trading pattern, and if that takes 3 more months to do so, so be it. We'll just continue to focus on niche sectors, stocks, commodities, and other things out there that offer a more attractive risk-reward profile. So that's it, and you can see there's that trend line. We haven't even back tested the trend line on the SPY. We're still below it, nor have we made new highs. And that's the other thing. I made mention the trading room today. When you look at the S&P 500, it has had numerous attempts. We've been in striking distance for a couple weeks now. One big day could have pushed us out to new highs, and the market failed to do so. That's not bearish. It just shows you, and again, I've talked about the volume tapering off, that the dryers have completely dried up. The buyers have, are holding and waiting to see what happens with these FANG stocks. How do the market leaders report? Shorts have just been burned. This has been an impossible trend to short, other than a few quick pullback trades. And so again, this is reflective here. Shorts are on the sidelines because because they should be, because we do not have anything remotely close to a sell signal. We could quickly. We're close to some trend lines and other things, but And then longs again, are reluctant to chase stocks at this level, so overbought. Plus, we're testing those highs right there. Failed to do it so far on SPY. And another example of just how, how much gas is left in the tank or not. When you look at the QQQ here, let me just add this line right here. Um, there was a previous high from back in 2018, and we popped it yesterday, and it was impulsive. But again, this is QQQ. This is not the stock market. This is really a tech index, if you will, very tech heavy, and it's not representative of the market or the economy. In fact, the S&P 500 is much more so, and you can see it didn't. So QQQ, point being that the NDX popped that, pretty impulsive candle, but zero follow through today, and so that's non-confirmation of a breakout. So let's dive into some charts, and again, that doesn't mean that it's bearish just because we haven't gone up. It just means right now there's no follow through, and it makes sense. Who wants to position buy at these levels right in front of the FANG stocks all reporting over the next week or so? Maybe the earnings are great and the market continues up, and again, so I think we'll have within the next week or so, when those companies are out of the way, I would imagine the market's going to pick a direction, whether it's going to keep going up, going down, break these trend lines, and come back in. So I want to start getting trade ideas out for you guys, and take them as you want. They're unofficial now. This one I said, let's start out here with TLT, because I posted in the trading room yesterday that it, I believed at the time, was an objective long entry because it had pulled back here to support a level I was targeting. This is a very key level, call it 140, 122.50 to 122.60ish. It's, you can go on the weekly chart. I have that line at 122.60, I think. Or no, there it is, 122.50. But again, a very, very significant level to me, and I'm still considering adding it as an official trade. We had it earlier, but here's all the reactions. You can see reactions from below right here, reactions from above. So again, a technically significant level. We broke out of it recently, which was bullish, very impulsive move, and we came in and back tested it. And so I've maintained this scenario since before when we were still within this bearish or bullish falling wedge right here, this wedge pattern, that we'd get a breakout, run up to 122.50 area, consolidate, then break out and run up here to the 128.56 level and back test that trend line. If this scenario plays out, chances are this will coincide with a pullback in the markets, because treasuries are a flight to safety instrument. You can see treasuries are being bid up today. TLT is up 0.7%. Nothing huge, but it shows you now that that pullback to support, which is, by the way, both uptrend line support as well as price support. In fact, this is the chart I started to mock up yesterday. I've listed, if you want to take the trade, where the stop would be in the price target. That's that. So you can see we had a divergent high, and that was bearish, and it led to a correction. But one thing that I like right here on the daily chart is this PPO trend indicator. During choppy periods like this, don't use trend indicators, moving averages, PPO, MACD, things like that. But when you have a trending market, this is an uptrend right here. This is a downtrend. When you have a trending market, the PPO 9 EMA does a good job of defining the trend, and so you can see as we go back in time, since this uptrend started, we've made a bullish crossover here. That white line, that's the one I use because it's the last of the two to cross. That gives you a lower chance of a whipsaw signal. If you use the brown line here, the or orange line, PPO line, you're going to have more whipsaws. So right now we have the PPO turning back up at the zero line. So what I could see happening here would be a thrust up there to that 128.55-ish level, and still keep this wedge intact, and then maybe get a deeper correction and put in another divergent high, extend the divergences right here, extend the divergences on the RSI, and get out here, and maybe even look to position short somewhere in the top of the wedge, and then ride TLT back down. again, just say, but that's what I'll do if and when it gets there. We'll have to see how the charts look. But as of now, I think it's objective. You can even run a much tighter stop, maybe below the recent lows right here. If we zoom in real tight, this candle, not too far below there, and that would give you a very nice RR. One final note on this, and until and unless I make it an official trade, TLT or government bonds, you're not going to get wiped out in a single day. Sure, they can move, on a very big news. This TLT might go up maybe over 1% in a day, but it's not going to go up or down 10% in a day. You're not going to have an earnings-induced gap down 20% or 10% against your position because there are no earnings. These are government bonds. My point, you can take an oversized position. If I trade TLT, I will trade up to easily twice what I would put into something like SPY or even QQQ because there's a lot less volatility. So while the gain potential is a lot smaller, from where I mentioned it in the trading room yesterday as a long, if it hits 128.18, you're talking about a 4.6% gain. You might say, hey, meh, why am I going to tie up my money for 4.6? Double up. A double-sized position would be then a 9% comparable return. And again, you're not taking on additional risk because the downside. And of course, manage your stops appropriately and quantify it. And finally, don't forget, I have that position size calculator which you can access on the site. Very useful tool if you want to try to quantify what would it mean if I buy a TLT here and my stop is hit or my target is hit, and then you can play around with the dollar amounts to determine what position size to take. All right, so there's one trade idea, and let's move on to the rest. We'll do the rest a lot faster here. Let's start out here with, I want to start out with another update on NAO. I covered that yesterday. I'll get to Bitcoin's maybe a potential short. I didn't want to pull this one up. Where's that other one I had? All right, forget about the before chart. This is NAO up again today, big day, 25% gain. But I wanted to point something out that I didn't before. Although I still have a final target up here, that line's at 540, by the way. The actual line's at 541. You want to take profits a little shy. And I still think it has a decent chance of getting there. I need to point out that this was right here, a bull flag continuation pattern right there. Or bullish, bull flag. That's the move, the impulsive move leading up to a formation of flag. If you take that and add it on to where it broke out, the bottom of the flag, we've actually exceeded the target a little bit. So keep that in mind that we popped above a bull flag target. You start to come into, or bull flag measured move, I should say. And we're starting to come in. There's some minor resistance there as well. So maybe trail stops up at that point if you're still in this one. And at this point in time, I certainly would not chase it because again, it's about risk reward. Yeah, that's a big move. If it heads on up there, it's at 450 now. If it hits that final target, you're talking another 16%. But a lot of the gains have been milked out of this one already. It's up. I don't know from where we first posted. It's over 70% easily, well over that. That's more of an update. Now let's just rifle through these names. I might skip over some. I have a long watch list, and I'm not going to cover everyone in detail here. EHC, I'm just going to point out. And by the way, check earnings. I've checked on some of these, but most of these I haven't. So I'm going to get to one in a second. And I'm going to jump to that now to kind of make a point because somebody asked about it in the trading room today. But before I do, here's the EHC Encompass Health. Nice wedge type pattern. It's actually breaking out today. I have two trend lines. You can see the BOD or benefit of the doubt is the second trend line. That's been taken out today. You can see my potential targets here. Probably should add one more level here around these reaction highs right there. So there's your targets, unadjusted actual levels. And again, check it for earnings. I'll show you the example. BJRI. Okay, somebody asked about this in the trading room today. It's one that I highlighted before. BJRI is BJ's Restaurant. So beautiful. Look at that downtrend line. Nice, clean, falling wedge. Positive divergences, everything I like to see. An impulsive breakout today. Volume's decent, not bad, but it's not great. And that's certainly an impulsive breakout, but there's two things wrong with taking this breakout in my opinion. Number one, which is smaller. You see this yellow line. This is the 50-day exponential moving average. It does a great job of defining, in this stock at least, not all stocks, does acts as support on the way up during uptrends, and it acts as you can see here, resistance on the way down. So there's number one. This is your BOD line now. It's not a trend line, but it's a 50-day moving average. Some traders, exclusively use moving averages. I like to incorporate as many things in my trading as possible, Fibonacci, retracements, things like that. But so while some eyes are watching this breakout, other eyes might be watching that 50, waiting for a breakout of that, or even looking to short a bounce up to it, which has worked throughout this downtrend since the stock top. There, quite a few. So that's number one. And again, you go back even farther, there's how well the 50 did a good job of containing the pullbacks on the uptrend. All right. More importantly, this stock reports tomorrow after the market closes. So while earnings could be good and it could certainly build on the gains, it's a crapshoot because this can go either way. I see a lot of gaps here in this stock, and I have to assume that some of these are earnings-induced gaps. And so taking a stock right in front of earnings is a pure gamble. So better to wait and see how things, how the charts develop after they report. Let the market open. Don't overreact to what happens in the after-hour session. Maybe it comes in and back tests to get an objective long entry. Maybe it just blasts away and you don't get a shot. Or maybe the breakout completely fails and the stock opens up down here on Friday morning. So again, that point I just wanted to mention because it's on my watch list as a trade setup, and has been. But again, that's one that I wouldn't step in front of. I like to take calculated risks, but I don't like to take pure gambles in trading. All right, let's go a little faster here. CNAT, Conatus, or Conatus Pharmaceuticals, CNAT is the ticker symbol. This divergence, I'd like to see the PPO curl up here and confirm this, but we see nice divergence building. Low price, very high risk. Number one, it's a biotech. That just right there tells you that don't put any more in this stock than you're willing to lose if it gaps down 50%. And biotechs can do that, especially small biotechs, because they tend to only have one or just a few drugs in the pipeline. Also penny stock. So here's the red flags. Biotech, penny stock. I'm trying to look little X marks here. That's about it. Check it for earnings, and you can try to follow what they have in the pipeline. But the problem again with biotechs, and I've talked about this, is sometimes you're expecting results from a clinical trial, but very often the results, some things happen during the studies, and in some cases FDA will just yank trials. They'll stop clinical trials, or the company will if the results are not going their way, if they're not working, and then boom. So there it is. Anyways, I just wanted to share this one as a speculative trade. If you're looking for targets, certainly here at the bottom of the gap, around 140-ish right there, that would be a natural first target. There's a huge old gap, big old gap to backfill. If it gets in there, there might be some resistance along the way there, certainly around 188, but it may want to run up here and then hit the top of this level around $3. And then there's a downtrend line that comes into play after that. So speculative play, sprinkle your Vegas money in that one if you like it. That's all. LVN.to. For you Canadians, maybe they have U.S. shares. I didn't check. I just came across this one. Again, this is a penny stock. Let me get away from that. It's not even talk about. It's 12 cents I had on the list. In fact, I might cross that out. TCBI, Texas Capital Bank shares. It's been on my list for a while. Broke out the other day. I have to check to see if they reported. That was a big move. I was looking for a break over 61.84, and it's come. We have it. So my first target would be, I had a line here. I might have to sharpen my pencil on this one and give you guys some more targets. I also want to take a look at the regional banking sector, KRE. So I'm just kind of passing this one along loosely now. I want to say I haven't honed down this list and identified my favorites, and I'll tell you this. If anything stood out right now as very compelling, I would add it as an active trade, an official trade. So maybe possible divergence there, and let's just move on from that one. Either way, it's broken out, so as long as it stays above 61.84, it looks good. LL, Lumber Liquidators. You can see, or I have it at the top. It just yesterday or the day before, yesterday kissed the top of this resistance zone. Let me give you that level. Edit, show value, there we go, 1320. It needs to pop 1320. It has a big old thin zone all the way up here to about 1702. Again, check for earnings on this one, but I like the divergence, big divergent low, and this stock can move. If you get in it and you get a trend, this one can put a lot of dollars in your pocket. So looking good, potential bottoming play. Again, just make sure you check it for earnings first. I have not done so on that one. GBX, Greenbrier Companies, looks like railroads, railroad sector. There's a downtrend line to watch. Not a lot of reaction, so I'm not super crazy about it. 50-day EMA needs to be taken out as well, and you have a potential target slash resistance up here about 38.35. Let's see, NIO, did I, NIO? No, let's see. Auto manufacturer, divergent low here. It looks like this one hasn't been trading very long, so there's a potential one. I put in a divergent low, it's been moving higher. So the way you trade this one, I've had it on my list since back here. It's kind of moved up a little bit since then. It's up about 10% or so, but you can set a stop below the recent lows. There's not a lot of charting history, but where I think it's going, if it continues, and again, we don't have any issues with earnings that I didn't check on this one. 592 is the bottom of this range. What I see is a sideways range since this stock came public after the IPO here, and it's been in that range. It had one little brief pop above there for about a week or so, fell back into the range, and it's now below there. So that's what I'd be looking at, is maybe a move up here to the 592 level, and that would give, from where it's at now, if it can continue, it's about 20% gets there. So maybe if you take a targeting 20%, use a stop around probably no more than 6-7%, and that would give you about a 3-to-1 risk reward ratio. That's not bad. All right, ACAN, I have a question mark, meaning I'm not too fond of it. Yeah, let's skip that one. Joe's just been, please, thank you, sir. May I have another? For those of you that remember the movie Animal House, we've had quite a few trades, including the recent one stopped out here, but I'm still watching it. I haven't given up on coffee yet. Not long. It's not an active trade since the last one was stopped out, but it certainly has the potential for a major bottom here. And when coffee runs, it can really run. But so far, it's just been a series of false breakouts, little fits and starts. We had this downtrend line, couple false breakouts, and so again, fool me once, fool me twice, that kind of thing. I'll just have to. This one's going to really have to put in some convincing evidence, and before I add another official trade on that one. But it's worth watching. SGG, I only meant to do 2 Gs. There it is. No, why did I type in SGG? No, not crazy about that one. I must have saw something else. SMRT Steinmart. This is a retail store, apparel store. I walked in one of those years ago and I couldn't get out quick enough. Who knows? Maybe they've changed. I'm surprised they're still in business. Well, look, they're a penny stock. They're below that $1 level. Super aggressive, speculative. Probably this one, again, unless they changed their business model since I went in there many years ago, this one's probably headed to, eventually to bankruptcy. So if you want to take a speculative shot at it, here's a bullish falling wedge if it breaks out. And what happens is stocks, when they dip above that $1 level, that's very bearish, because if they trade under $1 too long, they will be delisted. However, so what happens is the shareholder, the major shareholders, executives, they try to prop it up, and if a stock gets back above $1, it can usually run. That's what happened here. You had a huge rally. I mean, from the time it dipped below, got back above the $1 level, even if you waited and bought it on the gap up, you still had another 252% run in that stock. So risk and reward go hand in hand. If you wonder where it's going, well, these would be the targets here, these marked levels here, maximum 207. But again, where we are in the business cycle, and it's already flirted with that $1 level once, I wouldn't put any more in that stock than you're willing to lose. So I just wanted to pass it along and make clear that it's aggressive. OBE, Obsidian Energy, I found it about a week ago, was here. It's already had a pretty nice lift. It's a penny stock, high risk, but it was a nice looking chart. Look at that divergent low. Since the breakout, it's rallied 30%, and highlighting it now because if it pulls back, that 33-cent level is support. It was resistance, now it's support. Possibly offer an objective long, but I'll tell you where oil is right now. I don't know if I want to chase a lot of breakouts in the energy sector, but sometimes I look at a chart and I'll pass on it because I have my concerns, like I just said with oil, but the dang thing will go up. So I'm passing these along for those of you bullish on the energy sector or looking for trades. I'm not even going to target that high level now, but I can tell you this: if this company can turn the corner, if it's not headed to bankruptcy court, then it's 35 cents, and it could head all the way back up here to about 85. So there's potential there. I know I'm showing you guys a lot of high risk speculative trades, but again, some people like those. PEI, Pennsylvania Real Estate Investment Trust, it's a REIT, bullish falling wedge. You guys know I've been bearish on the REITs lately. Mentioning SRS as an unofficial trade idea, or IYR as a short. But here's one that looks better than most. It's a bullish falling wedge pattern. It's not a penny stock. That's nice. You have intersecting resistance coming in around 635 in the downtrend line. So you need to pop that. If so, first target's up there about 762. Although it might have a little hiccup here along the way. Again, if it breaks out, assuming 684 resistance, and then ultimately it could work its way up here. It'll probably need help with the REIT sector, although who knows? The REITs were soaring when this one was dropping. Who knows what it does? The thing about REITs, by the way, guys, is they're all different. You have some REITs that land the cannabis companies that grow pot. You have some REITs that are your doctor's offices at. You have shopping malls. You have apartment REITs. So they're not all created equal. Just keep that in mind, and that's why you can have disparity. Some REITs rallying when the sector is in a bear market, and vice versa. All right, SSI, I have a question mark by it. I know that's a retail store, apparel store. There's a downtrend line to watch. Not one of my favorite. I mean, retail's dying. We all know that. So be careful. Again, this one's flirting with that $1 level. There's a trend line that if it can break out, maybe it runs back up here to 160. That one's probably going to the wayside like many other retailers. MCC, Medley Capital. It's had a false breakout here. Another one. It looks like it's getting checked by this red line, the 200-day moving average. Let's just move on. That's not one of my favorites. BTU, I like this one. I shared it in the trading room the other day. I might have shared it in a recent video. It's a coal stock. You had a breakout here. There's a downtrend line. We broke out, ran up to that first target I had at 29.20, pulled back, powered back up, took out the 29.20 level, which was bullish, and next stop should be 30.49, especially if crude continues. Remember, coal is a competing energy source, so when crude prices are high, it helps coal. And there you can see additional targets if this one can get some traction. So this one I like, and it also no, I thought it paid a dividend. Looks like it doesn't. Oh yeah, it does. 1.75%. It's a dividend yield on that one. All right. BJRI are already covered. For you Canadians, let's check a look at this one. CFP.TO, Camphor Corp. No buy signals. This is clearly in a downtrend. PPO is pointing lower. That's not good, but it has potential here. Maybe these divergence lines extend. Maybe we come down and confirm the divergence and get a reversal in this stock. It would look something like this. You could extend that. So maybe a buy coming up here, and if so, you can see if it pops above 1454. Well, first of all, the first buy signal would come on a break of the trend line, and the next buy signal or first target at 1454. So you could swing it up. It depends how low it goes. Right now, again, let me be very clear, nothing even remotely close to a buy signal. This stock is in free fall. Not free fall, but its indicators are pointing lower, and it's moving down, poised to make a new low. But even from here to that level there, it's about a 12% gain. And if it could take that out, I could see it coming all the way up here to about 1850. And that's about a 44% return. Let's just glance the weekly, see if there's anything there. Yeah, looks like long-term support here on the weekly. So case can be made, as a potential bottoming play here. A lot of reactions there, some reactions there. So there's CFP.TO, Camphor. I'll check to see if there's, well, I'll do that right now. CNA for Camphor. I guess that's the same company here. One of these two, Camphor Corp. No, that one. Nope, that's not going to do it for us. Camphor. what's this? Camphor Pulp Products. That might be a different company. Okay, so I'm not sure if we do have U.S. based shares or not to trade for you there. All right, next up, USAU. It's been on my list. It's a little gold stock, cheapy. Went under $1 recently, but back above $1. It's at $1.12 right now. Got a pretty big level coming up here at 121. It had a divergent low. I've covered this one in the past. This chart goes back a ways. You can see downtrend line. Oh, there it is. Downtrend line going back for years. It broke out recently, but again, gold. It broke out right around the time gold had stalled out, so therefore it hasn't gone anywhere. So what it needs to do is get above that 121 level. It looks like it's been basing right here, and that would be bullish. So this one has a lot of potential. Very aggressive, low price, little junior miner, but you can easily double or triple your money in this stock, especially if gold catches a bid. And I'm still waiting to see that breakout in the euro US dollar, and very much watching gold. I won't cover it here because I like to do gold and the other precious metals and dedicate an entire video to those. But this would be about 185% return up to this 322 target right there for USAU. So one to watch. All right, TORXF. This one is another gold stock, and it's pulled back to support. You can see I have a support line right here. That's not a buy signal just because it's at support, and I don't see a strong case to step in and buy, but it's one to watch. And we can also add another trend line here. It's starting to crack below that. Let's just move off that one for now. I'm not crazy about it. And let's wait. I'll revisit all the gold stocks if and when I can make a case to go long gold. AKRX, Acorn Inc. It's a drug manufacturer. Nice divergent low. Getting cheap. It's about 288. So obviously something's gone on with this company. It dropped all the way from $35 down to under $3. But watch that trend line. And again, even if it's just a tactical trade instead of a strategic trade, where you're a tactical trade, you're just in and out. Get a breakout of the trend line, especially that also above that 329 level, and this one can pop up to 457. That'd be a big run. And then get out, or set your stops and let it ride. Maybe there's a recovery story. I also like to look into the fundamentals when you're looking at stocks like this that had the snot knocked out of them. Make sure that everything's in order and it doesn't look like they're headed towards bankruptcy filing. All right, HL is a miner. That's Hecla Mining. Divergent low. Again, I'll revisit these if and when gold starts to firm up. And so here's another one. GUY.TO, nice divergence. So potential, not actionable trades, just stocks that I'm watching right now. FSM, I think that's Fortuna Silver Mines. Yep. See, same story. And I told you recently, I like silver right now. The chart on silver looks better than gold, and I'm eyeing a lot of silver miners. So there's some potential in this one. Want to see this divergence get confirmed. Want to see this one start moving up, and we'd have a nice big divergent low right here. And this one definitely could make it up to $4 in short order if silver firms up. If silver can break out, that is. And that'd be about a 32% return from where we're at now. So there's one I really like. USA.TO. America Silver Corp. As you can see, there's a common theme. A lot of these silver stocks are standing out. Needs to break above that trend line. Targets right here, these two levels. AOBC. This one's a gamble, but with risk comes reward. This is the company formerly known as Smith & Wesson. With all the shootings, they changed their name because they do make a lot of I believe it's the most popular selling AR-15. It's at support. That's all I can tell you. 928ish. You can see it's come down to this level several times. It dropped below it briefly, but recovered it there. We had actually looks like an active trade on this one, and it's at that level again. So the old wash, rinse, repeat. You buy pullbacks to support, you sell the rallies. So, but you also do it with a stop somewhat below. There's a lot of buzz. Depends what happens in Washington, whether they're going to come in and outright ban assault rifles, which again I know make up a big chunk of this company's profits. So that's take it at your own risk, and just don't put too much in something like that where you have that kind of political risk that can suddenly cause a big quick move down or possibly a gap down in that stock. Alright, a couple more here. I already covered one coal stock. There's the coal ETF, by the way, KOL. Broke out recently, not very impulsively yet. Here's some potential targets. If you trade an ETF for a sector, you have less risk than doing the individual stocks. Was it? Let me see. What did I cover already? Was it BTU? Yes, I covered BTU. I think I had another one in that sector. Can't find it now. COE, China Online Education. I may have posted this in the trading room. Needs a break above both the trend line here and 648, or call it 650 to be safe. Here's your targets right here. A lot of potential on that one. And of course, many of these long trade setups that I'm posting are not all of them. This is sort of a niche sector. This doesn't have probably anything to do with the S&P 500, but it would certainly help if the broad market continues higher. If the broad market suddenly starts, coming under heavy selling pressure, we have a big correction, 5-10% plus drop. A lot of these long trade setups aren't going to pan out, even if they end up breaking out. So that's COE. A couple more. RAD, Rite Aid Corp. Just a potential setup here, maybe some work to be done. There's a trend line that needs to be taken out, as well as that 1262 resistance level. So it's one on my radar I'm watching. I don't see an actionable buy right now on that. And then finally, I think I already covered this one. Yeah, that's more of an update. That was a trade idea back here. Zine continues to run, but it's getting close to that 1134 target. All right, that's it, guys. I think that's all I wanted to mention now. So I'll follow up in a different video with gold. There's not any developments yet. The euro is still in a downtrend, although gold is moving up today with treasuries, so we're going to watch that. I think we're seeing just a little bit of a flight to safety, a little bit of nervousness with the big FANG stocks on deck, and I still think the potential is there for gold. Setting up. That's not a divergence line. Just take that away. And then, as I told you before, silver looks nice. Silver has this wedge type pattern and very strong support here around 14. Obviously not good if it breaks it, and breaks it with conviction. Sometimes you get these little whipsaw signals. There's a little one-day break, but so far silver was able to recover back above there. This is SLV, the ETF. So this is what I'm watching. But again, I want to see the euro US dollar breakout, and that has not happened yet. So euro US dollar, where'd you go? There you are. That's what we're looking at. So this one just continues to work its way down within this wedge. We need to take this, both these trend lines, the yellow trend line and the white trend line out. And so we'll watch that closely. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.